Here we go. Good morning, everyone. It's almost the weekend. Yes. I'm Heather Kelly. I am a business consultant with the Illinois Small Business Development Center at Rockford Chamber, otherwise known as Rockford SBDC. And because of your tax dollars, we are able to offer no-cost guidance to existing and startup small businesses in the areas of marketing, business planning, accounting, access to capital, cybersecurity, and IT. So thank you all for being here with us. I'd like to give out a few reminders of classes that we have next week. We have Andres Mendez is our speaker today. He's going to be speaking as well next week in our webinar called Human Resources Compliance. So be sure to sign up for that, rockfordsbdc.org. Also, follow us for more webinars and training on our handles, LinkedIn, Instagram, Twitter, Facebook, Rockford SBDC. We also have 3D printing classes available for the community, so be sure to check that out. And with that, I'd like to give a few reminders. Please put yourselves on mute during the presentation. Also, we will take questions in the chat if you'd like, or we'll ask out loud after the presentation. So with that, I'd like to introduce our speaker today, Andres Mendez. He's with the U.S. Department of Labor in the Employee Benefits Security Administration. So I'll turn it over to Andres.
Oh, well, thanks, Heather. I hope can everyone hear me first of all? I might as well confirm that before we start. Okay. All right. So like Heather mentioned, my name is Andres Mendez. I'm a benefits advisor with the Employee Benefits Security Administration, and we're part of the U.S. Department of Labor. And the best way I could put it is that our agency has jurisdiction over private employer-sponsored health and retirement plans. So today, we'll be talking a bit about health plans. And so the name of the presentation, as you'll see in a moment, is what it means to be a group health plan fiduciary. I will also be providing my contact info by the end of the presentation in case anyone has any questions. You know, obviously we can answer questions, probably hold off until the end of the presentation, or if someone's like feeling shy or maybe they think of a question after, right? You always seem to think of like the perfect answer or like the perfect question after the fact. You know, you could probably email me or give me a call. So with that, I'll share the screen. Okay. Let's get rid of this. Okay. All right. So we're here today, obviously, to help you understand how the fiduciary responsibility provisions of ERISA being the Employee Retirement Income Security Act of 1974, applies to group health plans and how to help you avoid problems in managing your plan. We'll also go a little bit into how it is that you can search for, you know, potential health plan solutions for your small business. So the term group health plan is actually defined in a section of ERISA, and it basically includes medical benefit plans, both insured or self-funded, and we'll go into a little bit about, you know, what the difference between those two are, as well as dental and vision plans. And so there are many ways to set up and run these plans, and we'll go over some of the basic responsibilities of setting up the plan, and then, you know, like I guess operating it, as well as some potential pitfalls that it might have. So today we're focusing on group health plans, but I want to note that many of the fiduciary responsibilities apply to other kinds of welfare plans as well, and of course to retirement plans, which we could explore talking about at some point in the future. So tips for avoiding common problems. Group health plan fiduciaries obviously have to carry out certain duties, right? Because we have limited time, we have grouped over, you know, a quick list of key responsibilities under ERISA, basically in 5 categories. These are things that you should be thinking about if you're planning on, you know, starting your own group health plan for your employees, for yourself also theoretically. We'll present the general overview of each topic later in the presentation. not every duty of the plan administrator will be contained in this presentation. Obviously, we have a very short amount of time. And I'm sure, more specific questions will arise, which we could probably address on an individual basis or case-by-case basis. So the law, regulations, and our own agency's guidance come in the form of advisory opinions, information letters. They also have these things called field assistance bulletins that often answer very common questions. They're kind of laid out in an FAQ format, so we could provide those upon request as well. And of course, publications, which are made available for employers and employees, depending on the point of view, the language changes a little bit. There are also many benefits professionals who help plan sponsors understand how to navigate, these responsibilities and or the various laws. So what is an ERISA group health plan? Essentially, it's an employment-based plan that, like they say here, provides various types of health coverage, right? So it could be medical, dental, vision, and for that matter, it could also include a variety of other plans like, I guess, short-term or long-term disability insurance, though I'm sure that would probably be too much for this particular presentation. Plans can provide benefits through insurance or be self-insured. So the main difference being here that insurance is like when you pay a premium to a health insurance company, some kind of carrier, and they're the ones that end up paying the claim. So this is typically, it could end up being more expensive, but of course, this is something that you would have to consult with some kind of benefit specialist, and I'm sure they would be happy to explain these differences as well. Versus a self-insured plan, which is, you still have a carrier that processes your claims, a third party, so to speak. However, self-insured plans essentially pay for claims out of their own assets. This is actually what most plans in the United States actually do. Most of them are self-insured plans. Very few instances of actually, like fully insured plans. Continuing, so a fiduciary, which people would be if they decided to start one of these plans for their businesses. So what's a fiduciary? We essentially have come up with a fiduciary test, which is a very functional one. So regardless of a person's title, if said person exercises any kind of discretion regarding plan assets, so, money for the plan, that person is a fiduciary. So it's important, for people who have any responsibility with respect to the plan to understand their roles and whether, they have or exercise discretion. So certain roles by definition involve exercise of discretion over plan assets or administration. So a quick little list here, not exhaustive, but, pretty simple would be the employer. So, if you run your own business and you're the one that sponsors the health plan, you are a fiduciary. The insurance company is a fiduciary as well, because obviously they are going to be making decisions essentially on your behalf. I mean, ultimately the plan sponsor, the employer, has ultimate responsibility, but also, the insurance company, they're executing what is written in the plan documents, which we'll talk about in a moment. The contract administrator or third party. So if there's any third party that's hired, for example, I don't know, to send out some kind of communication, right? A lot of these third parties offer, for example, they have standard letters for, what happens if an employee is terminated or, laid off or whatever. They have to receive a certain type of communication. I'm not sure if someone is unmuted, but if you could mute yourself during the presentation, we'd really appreciate it. Yeah, so a contract administrator or TPA, they are also a fiduciary, a plan attorney or accountant, so like actuarial services. If they're purely ministerial, which is something that we'll get into in a moment, that may not necessarily be a fiduciary, but a lot of times plan attorneys / accountants are. Record keeping services, so that doesn't necessarily apply too much to health. It could, but usually the insurance company is the one who would provide these services. Insurance brokers are also typically fiduciaries. ERISA imposes personal liability on fiduciaries for any breaches of their responsibility. So for example, a fiduciary who wrongly denies a benefit claim may be liable to pay those claims. I mean, this is pretty simple. I think most of us have an understanding of this, but it is worth mentioning nonetheless. Civil penalties may be assessed depending on the nature of the breach. For anything to go to court is honestly extraordinarily rare, and usually the problem is resolved informally. And so, we're looking to avoid all these problems, and it's, quite frankly, easy to do so. Settler or business activities versus fiduciary acts. So this is important to mention because, obviously, if you're listening to this presentation, you're probably thinking of starting one of these plans. There's no plan in place. So those are, what you would be going through would be called settler activities. So the decision to establish a private employee benefit plan and what benefits to provide is voluntary on the part of the employer, right? So employers you're not under any obligation to sponsor these health plans. However, if you do choose to do so, there is, like a legal framework that you would have to work in. So essentially, ERISA does not address these settler activities, the activities that occur before the plan is set up. ERISA only addresses the actions required to operate the plan once it's established. So plan design is one aspect of this. This includes things such as the level of benefits, how benefits will be calculated, how much the employer has to contribute, whether the employees must contribute. That's also something that'll be up to the plan sponsor during the settler part of this. While the plan design matters, our settler decisions, actions such as hiring a TPA and or insurance provider are actually fiduciary actions. So, just something, a distinction to hold in mind. So when you start hiring these third parties to conduct this business, it becomes a fiduciary decision at that point. Plans paying for expenses that are plans paying for expenses that are the obligation of the employer is one of the most common problems our investigators see and one of the easiest to avoid. So essentially, one of the major rules is that plan assets cannot be used for settler activities. It kind of seems almost odd that they would say this, but I guess what they want to say is that they don't want money that's destined for the plan to be used in those settler activities. Actually, before moving on, I should probably exit this presentation. And so one of the things that I was asked by Heather and by the Small Business Development Center to explore was, how is it that we actually explore our options in terms of, finding a carrier, that will provide something that, could actually benefit us and our employees. So, it is always possible to go and get quotes from insurance companies individually. You're certainly welcome to do that. There are processes that most business owners are familiar with. So like a request for proposal, I'm sure that is something that most health insurance providers would be more than happy to give you, along with breakdowns of, what kind of plans they could offer, whether it's like HMO, PPO, et cetera, the things that we've all heard of. But I, in doing my research for this presentation, I found that probably one of the easiest ways to do this, instead of going to places individually, would be to go to one centralized location, right? So that you could compare apples to apples, or as close to that as you can get, would be using healthcare.gov. So if you guys recall, in the late 2000s, early 2010s, there was a law that was passed that was called the Affordable Care Act. A lot of people referred to it as Obamacare at the time because, the president in office at that time was President Obama, or former President Obama. So the Affordable Care Act established this sort of marketplace of insurance. And what came out of it, one of the things that came out of it was this healthcare.gov website. And so this particular website, they also established what is called the Small Business Health Options Program, or they call it SHOP. This is actually a program, that most businesses listening into this are probably eligible for. It's fairly easy to find out. You probably have to fill out some kind of paperwork or electronic paperwork, but they will tell you pretty quickly whether you qualify for it or not. But employers can enroll in this program and then shop for private insurance. And like I said, it's a way of tackling this in a centralized location rather than getting individual quotes everywhere, which could be extraordinarily time consuming. And I'm sure a lot of you, frankly, don't have the time to be getting on the phone, possibly waiting half an hour to actually speak to someone, and then getting those quotes or going through all the intricacies. So the website does, of course, go over waiting periods that might exist, required reporting for this. They kind of go over what kind of documents you're going to have to provide to your employees or participants. And, if you want to set up the options for other ancillary type of accounts, like flexible spending accounts where people kind of, contribute to an account that they could then use that money for various qualified medical expenses. Also, workplace wellness programs, this is also pretty popular because a lot of businesses obviously want to promote the health of their employees and reduce costs to the plan. That's also an option to explore. So different parts of the website, I apologize for that drop-down menu. Different parts of the website here, I believe, is where you actually will, go to set up an account and explore the different coverage that might be available for, for your participants. And also the Center for Medicare and Medicaid Services, CMS. By the way, these are both government websites. The healthcare marketplace is kind of like a misnomer because it almost makes it seem as though, the insurance itself, the insurance plans themselves are some kind of like public program, but it's really just private insurance being sold on a federal website. But continuing with this, CMS, again, Center for Medicare and Medicaid Services, they also provide some guidance for businesses looking for, health insurance options. They also discuss this shop program, and of course provide other resources for businesses, in terms of how to model their plan, how to set it up, a lot of useful tips for avoiding common mistakes when going through this process. I assume there's probably things with regards to bidding processes, just to make things as transparent as possible, and to make it clear, that you made the decision that's in the best interest of the plan. And by the plan, we mean like the participants, right? That's ultimately what the laws that we oversee, ERISA, cares about the most, is that the fiduciary acts in the best interest of the plan. Continuing with the presentation. Let's go here. So we are fiduciary tip number 1. So turning now to the tips that we actually have for people who are exploring this option of setting up a health insurance plan for their employees. There are people who help you carry out your fiduciary duties to manage the plan prudently. So these are going to be like anyone who gives you any kind of advice. That short list of fiduciaries that we mentioned at the beginning. You want to carefully select and monitor these plan service providers. So ERISA requires that decision makers be familiar with the elements they're responsible for. So if you don't understand something, you probably need help from some kind of professional in that field, right? So like not everyone is a financial advisor, and therefore, maybe you couldn't allocate people's funds, to make safe investments, like if you had a retirement plan. Same thing applies to health plans. Not everyone is an expert in healthcare or processing claims and all that. So you're gonna need a carrier. You're gonna need possibly even a third party that sends out required reporting and disclosure items. When a participant might find themselves terminated, or maybe they had a reduction in hours, there are certain things that you'll have to send out eventually. So the selection of a service provider is a fiduciary act. And so prudence requires that you follow an objective process to make sure that you select the right provider for the plan, right? So like, I guess this is to avoid, maybe you have a buddy that is like that is a broker, and you just happen to use them, just purely to give them business, and they charge extraordinary fees or something. I'm just trying to think of an example, but obviously those are the situations that ERISA is trying to protect participants from, right? And so just remember that it is careful to monitor these various service providers, make sure that they're actually doing, or at least, prudently, what you believe they should be doing. Or like if you start getting complaints from participants, obviously that is probably an issue. You may wish to obtain formal bids from these service providers so that, it's clear which one is best suited for your plan's needs. You need to be aware if the contract provides, meaning the contract that will be in place, provides any indemnification or limitation of liability provisions for the provider. If you hire an outside record keeper, you want to make sure that the contract provides the plan's records to participants upon request. You want to monitor fees and expenses, make sure that, obviously it aligns with your company's business model, and that, essentially that participants are not being charged more than they should be paying for various services. The lowest cost provider obviously may not be the best, and it's not, there's no guarantee of quality necessarily with like the highest bidders. Just be prudent in selecting these service providers. Total compensation that the service provider receives for services provided to the plan may be no more than, or may not be more than reasonable, right? So again, trying to prevent those situations which do happen, unfortunately. I think that a lot of this is, fairly common sense. If something doesn't feel right, it's probably not correct. Fiduciary tip number 2. So make sure that required documents are given to plan participants or beneficiaries. So participants are going to be the employees. Beneficiaries are like their spouse or their children, etc. Most plans actually only allow for those very specific groups of people to even participate in the plan. So just as you would like to communicate, with your customers, you want to communicate with your own employees. So, I mean, I could give a very brief list of the most common disclosures that people might have, or that people might receive. So like, for example, if an employee is terminated or has a reduction in hours, that's a COBRA notice. The Consolidated Omnibus Budget Reconciliation Act, it basically says that you have to let people know that they are eligible to continue coverage under their employer-sponsored plan for a certain period of time after they've been terminated. If you're a small business, if you have less than 20 employees, ERISA will not apply to you probably. And so, or federal COBRA will not apply to you. And so you'll probably be following Illinois continuation coverage, but that's, a question that you could address at that time. Just know that there is some kind of notice that has to be provided to people. Obviously, you'll have to provide the copies of the rules of the plan when someone becomes eligible to participate in said health plan. There's a variety of different ones. Don't necessarily have to go through all of them. I'm just naming the 2 most common. Or upon request, there's also a list of items that have to be provided to people if they make a written request, right? When someone makes a written request, it kind of puts you on a timetable to actually get that to them. And it's typically 30 days, though I guess it depends on the kind of document as well. Let's see here. So again, like I mentioned, the SPD, this is probably the most important document out of all of them. The summary plan description, or SPD for short, it is required by law. It's a basic plan document that most, when you request bids for these services, right, like for a health plan to even establish one, most companies will provide you some kind of model SPD, that could be edited to suit your needs. And so the SPD tells people basic info on the plan, right? So like the plan name, the benefits under the plan, how to get benefits, claims processes, et cetera, et cetera. The department has issued regulations with regards to specific information that needs to be in the SPD. So like, for example, just very simple ones, the SPD has to be in writing. The SPD has to be written in plain language so as most people can understand it. Things like that. It also has to have information about premiums, cost sharing, the processes for, I guess, how the employee actually pays for this, which is through wage deductions, right? In terms of, what is the rule for getting people this documentation? Usually within 90 days of the person, being covered by the group health plan, becoming eligible. A lot of places will have waiting periods. That's up to the business and how they create their plan document, but just know that there is this 90-day rule. Obviously, the sooner you get it to them, the better, but there's this 90-day rule for when people who become plan participants have to receive this document. Supplying the summary plan description, it's typically something that's provided in writing, though it could be offered electronically. And in terms of the language, obviously English, though, it may be possible depending on the workforce that if there is a significant portion of the employees who speak a different language, that may change the way that you have to actually provide this information to participants. But if you find yourself in that case, honestly, just reach out to my office and we could discuss that. Fiduciary tip number 3, understand your plan and obviously your responsibilities under said plan. So one of the most important things, for example, probably the most important thing when it comes to this summary plan description is that in no case can you override the rules of your own plan. So if the plan states, for example, just as a very loose example, that the plan will only pay 80% of the reasonable customary charges for medical procedures, the plan may not pay 100% of such charges for a particular individual, right? That would be like favoring one participant over another if you decided to apply to one person and not everyone. Or for that matter, a participant might try to claim that, oh, well, this percentage should be paid. Well, if you could point to the plan document and prove your point that only maybe 80% or 60% should be covered as opposed to what the participants are arguing, then that kind of ends that argument right there. So there are parts of the SPD that are going to be up to interpretation. So if there is a disagreement in interpretation between the participant and you, the business, you could contact us about that. And one of our advisors should be able to, determine who is in the right, but if we cannot, then we can obviously send an inquiry to our national office and have the Office of Determinations look at the issue. Essentially, the rules of the plan will spell out your responsibilities, your duties as a fiduciary, and also the duties of the participants, because the participants also have certain things that they need to do, right? So like when they present a claim, if they want to appeal something maybe that was denied, the burden also falls on them. It's not just on the plan itself. There's also things that the participants have to do, like provide changes of address, provide certain documentation to the plan within a certain period of time, or like I said, if they're appealing a decision, they have a limited amount of time to do so, and there's a process that they have to follow, or else they could actually end up forfeiting their right to appeal under the plan. So we've kind of gone over that a little bit. I could talk about the specifics of certain plan provisions, like the appeals process, which is something that unfortunately people have to go through a lot, but I don't think that that's appropriate given our time constraints. Fiduciary tip number 4, moving along. So in terms of making timely contributions, this is honestly probably the most common thing that we see but in terms of like an actual problem with a plan. So there is a limited amount of time for contributions to be made. We see a lot of retirement plan contribution issues, but in terms of health plan contribution issues, we do see them a lot, especially like during economic downturns. It's important to obviously forward your portion of the premium as well as the employee's portion of the premium to the health insurance company or the third party that handles that service on time. We don't want any disruptions of participants' benefits, and obviously, if a participant is paying for a benefit, they should have active coverage. And so in general, once it's determined that the assets, meaning the deductions, are plan assets, they must be held in trust, and unless an exception applies, which is very rare. So just remember that contributions ought to be made timely. There are certain provisions or safe harbors. So in any case, the assets must never, take more than 90 days to make it into said health plan. Employer contributions. So the employer must contribute or pay premiums per the plan document. So whatever percentage, for example, is set up within the plan documents, that's the percentage that the employer is going to have to forward in contributions / make deductions for the employee's portion. A lot of this, there are, I could name statutes left and right, but I'm not going to bore the participants to death. And honestly, these are things that if they become an issue, it's better, just to address them on a case-by-case basis. And these are things that are pretty simple to avoid. Prohibited transactions, I'll just mention them very quickly. These are things that could also potentially land you in hot water, depending on I guess some of them are more egregious than others. But like, for example, prohibited transactions are transactions that are directly or indirectly conducted with parties in interest. So again, this is trying to avoid what you could term as like self-dealing, right? Or I guess benefiting certain contacts or acquaintances that you might have. So parties in interest include fiduciaries, so other co-fiduciaries if there are any, which there certainly will be, employees of a plan sponsors. These are all people who there are laws governing how interactions between these people can go and what they can and can't do. fiduciary tip number 5. So you have to file reports with government agencies, namely the IRS. To be honest with you, most of you would be filing what's called a Form 5500. It's a form that essentially discloses the finances of a plan, and or it's used to identify any potential issues with a given plan. It's just know, that there are certain deadlines for filing these reports, and or you could file for an extension of these. And it's actually filed through a system called eFast. eFast is a government website, and it will make you aware of the deadlines associated with this. And there are some exemptions for small plans, which a lot of you honestly may not even need to file this Form 5500, or you might be able to file what's called a short form, which is much simpler, as the name implies. But if you have like less than 20 employees, you're in all likelihood not going to be filing this Form 5500. But some of you may be in a situation where you do have those number of employees, and you would file that through eFast. So essentially it's like an annual report meant to I guess reveal or make transparent the operation of the plan itself. So there will be disclosure on, for example, fees paid to plan service providers, et cetera, bonding. If there has to be like some kind of bonding for the plan, then that'll be in there as well. It's mostly for accountants. In reality, they're the ones who will be preparing this. That kind of wraps up the presentation for today. I think I went a minute over what I thought I would, but here's our contact information. So you could go on our website and you could ask us a question through askebsa.dol.gov. You could give us a call, and any one of us 8 advisors that we have currently at our office in Chicago can answer your questions. There are numbers down there as well for other I guess enforcement agencies. If you have specific questions about regulations or interpretations, you could theoretically contact them, but a lot of times it's easier to go through us, and we could usually get an answer for you. And actually in the chat box, I can put my personal contact info if you feel comfortable talking to me after this presentation. Hopefully, we could definitely connect in the future. And if you have any questions about, going about setting up a plan, or questions about operating the plan in particular, I'm more than happy to, either give you the answer or find the answer if I don't have it readily available. I guess that would be a good time for questions if anyone has any questions at this point in time.
Does anyone have any questions? Feel free to type in the chat or exactly. Unmute and ask your question.
I could stop sharing the screen for this portion.
Does anyone have any questions at this time? Okay. Andres, do you have your contact information in the chat?
I will type that in now.
Okay.
Let's see. So put my name.
Okay, we have a couple of comments. Okay, we have a comment. DOL hasn't historically monitored health plans. Is that changing?
So in terms of monitoring, I'm going to assume you mean like conducting investigations or auditing. That's kind of like already an extreme case, because most health plans probably won't experience anything like that. I don't know if you could maybe specify as to what you mean monitor. I guess one of the things I could say is there are certain initiatives, right, that that each department implements in a given year, or perhaps maybe after elections. Sometimes depending on which political party is in office, they may want to pursue certain or what they perceive as certain inefficiencies or perhaps issues. And so an example I could give of this, and we'll probably talk about this the next time we or for our next presentation, is there's a law that's referred to as MAPIA. It's mental health parity, for all intents and purposes. And so during the last 2 years, we've been encouraged, our agency at least has been encouraged to look into potential violations or issues regarding mental health parity. So essentially what that has to do with is maybe benefits that might have been denied in the past using various strategies, for people who have mental health claims, like visiting a counselor, or maybe getting in treatment or in facility treatment inpatient treatment, like substance abuse, unfortunately a big issue. We've been asked to look out for that kind of thing. So our agency mostly works off of, frankly, calls from participants or businesses. An employee might call us because they're having trouble getting a claim approved, and we'll try to gauge whether or not there's an actual issue or whether it seems like the plan is actually doing its job, what it's supposed to do. Employers might call us because maybe they notice that there's an uptick in claims or in a certain type of claim, and maybe they feel that those things are being denied incorrectly, or maybe they feel that there's a problem with the actual third-party administrator, and so we could take a look at that. But in terms of, like, are we targeting, like, are we out there looking for plans that might have an issue? Not necessarily. It's mostly just depending on what comes into us, from part of a participant or an employer. So I see here that there's a clarification that fiduciary responsibilities for health plans haven't been in the forefront. Yeah, that's correct. That's correct. I would say that's not necessary, that we haven't necessarily, like I said, been targeting, for issues in that regard. I would say mostly in retirement is the ones that we have been targeting for, not necessarily health. That could change, of course, but to answer your question, you're correct. It hasn't historically been something that we go out of our way to look for.
Are there any other questions? Okay, and we have a comment that this is great info. So thank you.
Oh, well, yeah, sure. And
Thank
of
you.
course, there's only like a limited, since there's a limited amount of time, obviously, there's only so much you could say. I'm sure we could spend hours talking about how you could actually set up a plan and or going for those quotes and stuff like that. But I think this is a good general overview of how it is that you even establish a plan, and then what you need to do once it's actually established, so as to not probably upset one of your participants and or have them come to us, which even if they do, like I said, most things are resolved informally. So it's not like I wouldn't necessarily be like terrified of if something goes wrong. And most of these things can be dealt with informally, and they don't result in an investigation. So like if I, as an advisor, for example, called one of the businesses, I would see how we could make the situation, or how we could correct the situation, and or how we can make the participant whole. I'm not an investigator, so I'm not going to like subpoena people or anything like that, just to get that out of the way. Can
We
plans
have another
be
comment.
yeah
Andres.
can plans be set up to only provide coverage for a portion of employees? So the plan is generally established for all the employees, right? So, because if not, it could be viewed as being discriminatory. However, there's a caveat that should be added to this. If there are different categories of employee, right? Because, so like, let's just think of an example. Sometimes maybe you want to provide a more generous package to an executive of the company, right? Or to managers or something. There are certain classes of employees that you could justify, for example, having a different level of benefits for. However, the plan would be, there would be a plan offered to everyone. And within that plan, there's like a certain coverage option offered to a very specific group, or groups plural. I hope that answers your question. There's regulations and statutes that we could point you to. And perhaps, if you're interested, since I dropped my information in the chat box, you could contact me and we could have a conversation over the phone in all likelihood, or email, if that works better. But generally speaking, the plan is offered to all participants. And then once that plan is offered, there are different levels of benefits that could be offered to certain groups. And that's fair game. It would be legal.
Any other questions? Okay, Andres, thank you so much.
Yeah, no
You will be
problem.
back next week to talk about human resources compliance for small businesses.
Yes.
Be sure to sign up for that, rockfordsbdc.org, or our Facebook page, Rockford SBDC. And thank you, Andres. We'll see you next week. Have a great weekend, everyone.
Thank you. Thank you for inviting our agency to speak. Have a good day.
Thanks.
Mhm.
Bye, everybody.